Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about SoFi Technologies and Palantir Technologies. For the first article we're going to be analyzing regarding SoFi Technologies, it's titled, Why You Should Invest $100 in SoFi Stock Now, and this is referring to investors who have yet to invest into SoFi Technologies, so he's going to be going over the evidence about why this is such a great investment. Up next, we're also going to dive into why insiders are buying more SoFi shares, which is great news, particularly why the CEO has recently bought $5 million worth of SoFi Technologies stock, which is very amazing, and that's why we can actually see the price of this company increase slightly based upon this good news, because normally insiders only buy if they think that the current stock price is trading at a discount compared to what the company could be in the future. And if the CEO is buying, this gives us a great signal that the CEO believes this company is undervalued right now. Lastly, we're going to talk about Palantir Technologies, ticker symbol PLTR, and why the company has recently risen by around 6.1% over the last week, but why some analysts believe this company is overvalued, which would include myself. Palantir does seem to be on a very positive bullish trend, which is very good. However, there is still some risk that we need to go over for this particular company because we want to practice proper risk management so we can have very good growth over the long term. So for more videos on SoFi Technologies or Palantir Technologies, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into today's stories. SoFi Technologies, ticker symbol SOFI, currently trades at $4.43, and this company is a fintech company that essentially operates as a digital bank. Professionals in this space believe the company should be worth anywhere between $5 on the low end and $10 on the high end over the next 12 months. So it's very arguable that the company right now is trading at a huge discount, and some investors believe this company is undervalued, which is why they're investing into it. This could be another reason why the CEO has recently bought more shares in SoFi, because he believes the company is undervalued right now. If you're the type of investor who wants to buy low and sell high, then SoFi could be the company for you, or at minimum, you should keep SoFi Technologies on your radar. The company has demonstrated very good growth over the last year, and their revenue growth is a very important metric about where the future share price could be headed. On top of that, Wall Street professionals are expecting the SoFi share price to actually increase as we go into the year of 2023 and or 2024. Despite the government extending the student loan moratorium, where people who have taken out a student loan don't have to pay on their student loan right now and their student loans aren't accruing interest, this is somewhat of a setback for SoFi Technologies because they generate revenue from refinancing student loans along with a plethora of other things. So the extension of the student loan moratorium was not advantageous, and it acted as a very negative catalyst for this company, which is why the overall share price is suppressed right now. But if you don't mind the risks associated with this company, the author argues that if you're not invested into this company already, you could invest a modest $100 and let it ride for the long term because the risk to reward ratio is very good right now. The reason he's advocating for $100 is because he's basing it off of a total portfolio weight. So I personally don't have more than a 5% allocation to a single risky growth company in my portfolio. For SoFi Technologies, I currently have around a 4% allocation to my portfolio, so I only have a few $1,000s invested into this company. There's no reason for us to overexpose ourselves to a single risky growth company while the current macroeconomic environment is working against single risky technology growth stocks. That's just not a smart move, and it's definitely not proper risk management. You should have a very well diversified portfolio in all sectors so you can be set over the long term. I've used this analogy before. If you're betting on a horse race, why bet all of your money on just one horse? Why not bet on all of the horses so you're guaranteed to win more than you're losing? And that actually works with the stock market if you can identify good stocks to invest into, which I think SoFi is one of them due to their amazing growth. The author goes on to say that there's been a huge disconnect between SoFi Technologies' revenue growth rate and the company's overall share price, which has gone down while the overall revenue growth has gone upwards. Starting back in the third quarter of 2020, SoFi has grown its membership count by at least 60% year over year, which is amazing news. As they grow their overall members, it allows them to cross-sell products to these members and thus increase their overall revenue and help them achieve profitability earlier than expected. Also, during that quarter, SoFi Technologies improved their overall adjusted net revenue by 51% and above. And on top of that, the company's adjusted EBITDA increased by 332%. That's absolutely wild. But despite the company growing their overall net revenue on top of their overall adjusted EBITDA, the share price has fallen by around 70% over that same time period. So clearly there's a disconnect between SoFi's fundamentals and their share price. Now, that doesn't mean that the share price will not keep falling. Again, we haven't reached a bottom right now. The current share price is trading sub $5. However, many people believe this company could drop as low as $3 per share. So you need to be wary and at least aware of that risk. And if it does drop to $3 again, the management of this company will issue a reverse stock split, thus increasing the overall share price, but not necessarily your shareholder value. So you really need to be prepared for this company to drop even lower in price, which is why you should slowly nibble at this company, in my personal opinion, because many traders right now are fear of further downside in this particular company. Now, for me, I'm not a stock trader. I do not buy low and sell high. I buy a company that I like and that I understand. I dollar cost average down the stock price of this company until it reaches around a 5% allocation, and then I hold this company for the long term, and this has paid off very tremendously. In the next video, I'm actually going to show you a portfolio that I started last year, and it's already up $25,000. So if you want to watch that video, make sure to go and check that out after you finish this one. However, the great news about SoFi is that analysts on Wall Street believe this company is undervalued, and they anticipate and project that the future share price of SoFi Technologies will increase in value. For instance, a Mizuho analyst issued a buy rating on SoFi Technologies not too long ago with a $6 price target, and that's not that bad considering that the share price is trading around $4 right now. That may not sound like a large amount of upside going from $4 to $6, but trust me, that is a substantial increase. Also, another analyst from Wedbush, which is a very prestigious financial institution, one of their analysts issued an outperform rating on this company, which is similar to a buy rating, and he also gave this company a $6 price target, which again suggests that this company is undervalued right now and then it has a large amount of upside. Based on around 10 analysts, they have a median price target of around $7.15 for the next 12 months. On top of that, if we highlight their current projections in regards to their earnings, we can see this company could be a profitable company by the end of 2024. So that is very encouraging to see. And we also have some other analysts who believe the company could be profitable as soon as the end of 2023. Therefore, it's very sensible to at least put this company on a watch list, invest $100 into it, or have a small portion of your portfolio allocated to this company. Again, by practicing proper risk management, we do not want to overexpose ourselves to single risky growth companies, which would include SoFi Technologies considering the current macroeconomic environment. If you're invested over a 5% allocation in this company, I'm going to say that you're taking on unnecessary risk of losses. There's no point to over allocating yourself to such a risky company. You need to practice proper risk management so you make money over the long term. But again, always make sure to do your own research to make sure these companies meet your personal investing style. All in all, SoFi Technologies is demonstrating very solid growth, and analysts believe this company is undervalued. And according to future price targets and price predictions, this company is worth investing into if you plan to hold it over the next 2 to 3 years. On top of that, the CEO also thinks that this company is worth buying right now, considering that he recently purchased around $5 million of common stock according to a Form 4 filing, which was published on Tuesday. On top of that, I want to say that SoFi Technologies has actually gained in their overall share price in the pre-market on Wednesday by around 3%. So clearly, more people are becoming bullish on this company based upon the CEO buying more stock. Now, there is a risk for this company in the sense of lawmakers want to review the crypto trading activities of SoFi Technologies, and if they find anything sketchy, this is going to act as a negative catalyst, which is going to bring down the overall share price. But all in all, I don't think we should have anything to worry about in this regard, but even if it does happen and they do have something sketchy going on, this will impact the stock price negatively. It could drop as low as $3, and then this would just be a better buying opportunity because it lowers our overall risk of losses. We really want to make sure sure that we want to hold this company until it becomes profitable, because that's when the share price is going to start accruing actual gains. Similarly, when we talk about another company such as Palantir Technologies, ticker symbol PLTR, which is a big data and analytics company that serves both commercial enterprises as well as government clients, this company is not profitable yet either, but we'll go over their forecasts about when this company is going to be profitable. Right now, the PLTR share price is trading at $7.50. However, I personally think that considering the current macroeconomic environment, this company is overvalued. That's why professionals believe this company should be trading between the range of $5 and $15, and for me, according to DCF models, I'm going to say this company should be trading closer to $5. But despite this, Palantir has been very bullish over the last week or two, so investors are actually excited for this company and what they could make of themselves. Investing into stocks naturally comes with the risk of the share price falling. When the share price falls, it doesn't mean that this company is a bad company. It just means either A, you picked a bad company and they're fundamentally not strong, or B, you haven't waited long enough for this company to officially recover for the market to identify the true value of this company. And that's what this author believes is happening with Palantir Technologies. He believes the share price is falling due to macroeconomic factors and because people overhyped Palantir Technologies, which is why the share price has slid by around 60%. But recently the stock has actually gained around 6.1% in the last week due to a recent partnership, which is phenomenal news. Long-term shareholders are still in the red for this company, but if they rely on the fundamentals, depending on how long they want to hold this company will be green eventually. If we focus over on their revenue and the revenue growth rate, investors were somewhat underwhelmed from what they were originally promised. For instance, management promised a 30% growth rate over the next 3 to 4 years. And that's not what they got, which has caused many investors to sell their shares. On top of that, this company is an unprofitable company, but they expect strong revenue growth going forward. Palantir grew its overall revenue by 28% over the last year, which is pretty positive, but again, it is lower than the 30% we were promised. Now, current projections think the company is going to have a growth rate anywhere between 20 to 25%, so again, it dropping even lower is not impressing investors. However, overall, a 20% growth rate, even if we take the most bearish projections, is pretty solid. Unfortunately, investors aren't impressed with these metrics. But the good news is that we do know when this company is projected to become profitable. At the end of 2024 or the beginning of 2025, many people believe the company could fall to as low as $5 per share, but then once the company achieves profitability right here on screen, which is the end of 2024 or the beginning of 2025, that's when the share price is going to set to appreciate and really start to explode in their overall share price. So if you're willing to hold this company until it becomes profitable, then buying right now may not be a bad opportunity. However, again, I would encourage you to practice proper risk management, not overexpose yourself to this company, and nibble at this stock once in a while to lower your average cost, while not overexposing yourself more than a 5% total allocation to this company compared to your overall portfolio value. The author concludes by saying, until we see some really strong business performance from Palantir Technologies, this company should be on a watch list, and even very bullish investors should only nibble at this company once in a while. But to offset the risk, the lower price you can get this company for, it lowers your overall risk, and the longer you plan to hold this company, that also lowers your overall risk, because you're only taking a loss on this company if you liquidate the company. If you hold, technically you only have losses on paper, and you don't have any actual losses. But I would love to hear your thoughts both on SoFi Technologies and their recent surge in their share price due to the CEO buying $5 million worth of common stock, and why you think Palantir recently has entered a bullish positive pattern in their share price, and whether or not you think this company is overvalued or undervalued. Remember to go and smash that like button for more videos just like this one, comment your thoughts down below, subscribe if you haven't already, and I will see you in the next YT video.